Hello and welcome to a brand new episode of Big Deal. I'm Nisha Podar. Now, as India grows, the small and medium businesses will need more capital, an area which we all know is already underserved and underbanked. So what are these avenues which is going to really fuel the growth in the SME space? Let me welcome on the show the panelists who really focus on this space. Let me welcome Siddharth Parekh of Paragon Partners, Aseem Dhru of SBFC, and Sumant Rampal of HDFC Bank.
Hi.
Gentlemen, so good to have you on CNBC-TV18, and thanks so much for stepping by in the studio for a better discussion. Now, Sumant, beginning with you, it's often said that banks do not focus on this particular area. Now, do you think that the banks would train their eyes towards this as a customer base for banking the SMEs, because the growth potential could be huge there?
Oh, absolutely, Nisha. And I think this is a segment that we at HDFC Bank, and I've seen others also very heavily focusing on. Last half a decade for sure has been fantastic in terms of reach to this particular segment. And we are very happy and very proud of our association with MSMEs.
Right. And it is growing.
It is growing pretty well. Our biggest strength has been that, and MSMEs love it because they see a bank coming with a plethora of products to them. It's like providing them not only financing, but the entire banking product suite, which is the most important thing for the MSMEs. It's just not about money, it's also about the banking facilities.
Right. Let's talk about SBFC, focused on this space. Now, Aseem, from the banking background, you actually focused on this area and started this NBFC. How have you seen in the last few years the growth and the potential of this segment?
So see, NBFCs are coolies of credit. So we take credit from banks and then take it down and parcel them out to the small businesses across the country. And we kind of fill in the gaps left by the big rocks, the banks. So the MSME in India is a blind man and elephant story. So everybody looks at the MSME and finds it and views it differently, finds it different. We focus more on the micro end of the market. There are 64 million businesses in this country, and only about 9 to 10% have any access to organized finance. So the market is pretty deep. It is very long. It's a long runway, but it is difficult because these businesses are ubiquitous. They are there across the country. And for you to be able to reach out is a big challenge. But big challenge, if you solve it, big problems, there are big payoffs.
All right. So high risk, high reward can also be one of the aspects. Now, Siddharth, private equity, they have not looked at this space. What have you identified in terms of the potential in this area? And what is your key focus when you invest and give equity capital in the SME space?
Thanks, Nisha. Our focus as a private equity fund has always been in the SME space. We identified this space as a large investing opportunity. Given the funding mismatch here, there's a huge supply-demand mismatch. According to our research, there's about a 60 billion equity gap in terms of funding, and only about a quarter of that is filled by internal accruals of the SMEs. So we think that there are fewer funds operating in this space, and this gave us the opportunity to invest growth capital to really help these businesses scale up through capital and also through our expertise. So we focus on the mid-market space. We invest growth capital. We look at businesses that have already proven product market fit and have scaled to a certain degree, and then we look to take them to the next level of growth.
Right. So in a way, if I say, Siddharth, you also help in bringing about all those important governance standards and probably shift them from unorganized to organized. Is that something that you have experienced as well?
Yes, absolutely. We work very collaboratively with the management teams and the founders to really establish robust governance structures, systems and processes, help them navigate on-the-ground challenges, and get them to the next level where they can potentially go for an IPO or be sold to a larger business. So we work very closely with them to institute a lot of these practices.
That's right, the best practices. And Sumant, now banks, when they look at smaller businesses, with so many pieces of the puzzle not in place yet, do you think there's a lot of advisory that comes into play? And how many banks you speaking from the sector. So how many banks are really focusing on this? Because your cost of customer acquisition also becomes very high.
Yes.
So what is it that that's in favor of the banks to focus on this?
See, our experience is this, that when we go and meet up with an MSME, the need of the MSME is, of course, the funding from a growth perspective. But we've also realized that most of these MSMEs also need a lot of support on basic banking, support on if they are large importers, exporters, to kind of advise them on the treasury side. If they are wanting to grow within the country, how cash management services, digitization, technology can really support. So we put a lot of energy on making sure that our customers are getting the whole suite of products from us. And that's been a great learning for us. It's been a great value add for our customer. And that's the reason the bank, HDFC Bank, today is one of the largest MSME lenders in the country. And we believe that that has been the biggest change for the MSME segment. They have been wanting money for many years, but it's only in the last few years that they've seen banks coming along and talking a lot of other things along with it. So it's been a great benefit to them.
Right. So the requirement is just so much, and the gap will take a lot of time to really be filled. But Aseem, you think that these businesses and micro side of these smaller businesses is what you focus on. Do you think there are many risks attached, and especially with one person holding that business and all your risks attached to that one key man?
No, absolutely. The difficult part of this is that, see, you have to understand a little bit of history of how this sector evolved. So India, we could not take our people from agriculture to industry as China and other countries have. So somewhere people willy-nilly migrated into trade and services. So we became a nation of shopkeepers and small businesses. And these are all family-run businesses. They are not really entrepreneurs. They are more self-sustaining businesses. And they are family-run. Generally, they own it. The property is also owned by them. They are businesses that use family labor in the setup. So effectively, they are very, very niche businesses, and very small businesses. They reach out into that geography neighborhood. And therefore, we emerged a wonderful market across the country where all our towns, if you see, the common factor is that they will have every street will have a kirana shop, it will have a garage, it will have a salon, it will have a cobbler, it will have a tailor, it will have all various small businesses.
Yes.
And the problem in this business and the challenge is that how do you differentiate between need and demand? The need is a lot, but demand is not as much, because you have to segregate the ability to repay also and the ability to establish cash flows. So the challenge of this business is that how do you establish who should you give the money to in a way in which it's going to come back.
Yes.
So as India has become slightly better in terms of structure of the economy, it's becoming a little easier, but still availability of documentation and availability and the possibility of sifting through these businesses to find the diamond in the haystack is the challenge.
Right. Okay. So identifying the customers with lower risk, higher potential is a challenge. How do you do that, Siddharth? Of course, your category of investment is probably medium enterprises or small to medium, that category, which is slightly easier. But what are the usual challenges that you face, and is the risk much higher and therefore the rewards?
Yeah, so as a fund, we are a sector agnostic fund. We look at a very bottoms-up approach in terms of our investment strategy. We invest across a few key themes like consumer, financial, healthcare, manufacturing. We are not a pure play technology investor, although we look at technology as a key enabler for our businesses and as a core part of the value proposition that they provide. We do conduct a very rigorous due diligence process similar to other funds. We look at financial, accounting, tax, legal due diligence. We spend a lot of time with the management teams and founders to really understand their accounting practices and business practices, to really evaluate their capabilities and their capabilities to grow the business. So while there is higher risk, I would say, in terms of investing in these SMEs, just given the scale and size they are at today, our work is quite extensive. We also do comprehensive reference checking on the individuals. And we look at exit options. That's also a core part of our diligence in terms of what are the sources of exit for our investment down the road. So there's a lot of work that goes into the due diligence to finally come to a decision for investing.
All right, so lots of checks and balances, and of course, finding the key areas of growth, that is a big challenge. So, Sumant, do you think the technology has helped? Do you think they are, savvy when it comes to technology, and how is HDFC Bank strategizing probably this area?
No, no, so we've seen a big shift in the mindset of the micro and the small and the medium enterprise, and they are adapting technology, they are adapting to the new ways. I personally feel the whole movement on the whole GST stack which has come along, and that is supported in a very big way, that the MSME has started to realize the importance of a structured way of working. That data is being used by us and other banks to kind of go out and reach out to our customers. And that is, I think, where the play is, that how can you use data?
Yes.
Clearly, I personally feel that there is going to be a lot of miniaturization of credit also going forward, because all of this data will be available with banks, with NBFCs, and that will be used to kind of provide credit.
Right.
We've seen that, we've been successful. Yes, there are those teething issues which keep coming along, where acceptance on the processes for some of these things. But I think most of the MSMEs are finding that to be a very strong, useful product stream or way of borrowing.
So government is also enabling this entire ecosystem when it
Absolutely.
comes to data,
Yeah.
account aggregation, OCEN. How is that helping?
So, I personally feel there's a lot of focus on this from the government, and if you really see the schemes during COVID, the whole support that was provided through the ECGLCS. Right now, the CGTMSE schemes, the AIF, which are all beautiful schemes for most of the MSMEs to go out and use that for financing. And then along with that will come data, along with that will come growth for them. So this is the right framework that is getting created. As Aseem said, that there are more than the 62 million MSMEs, and that number is actually, if you see the latest report, it's coming to 80 million. So
Right.
that number is just kind of growing by the day. And clearly data is only going to help, because the more they are on a structured platform, they'll be able to get access to credit, they'll be able to get access to finance.
Right. But Aseem, Siddharth made a point about checking the financials. Now, when we talk about formalized economy and not so much, you deal with customers who don't even have a proper balance sheet. How do you tackle that?
So see, if you first the background between GST, between demonetization, GST, UPI, and and a better tax compliance environment that's got created. See, our tax to GDP ratio is now almost touch 18%. That's almost at the bottom end of the OECD countries.
Yes.
So effectively, you can clearly see that the amount of earlier, when, for example, there's a coconut vendor on the side of the street. There is no way to assess what the turnover of that person is. Now with UPI coming in, at least 10 to 15 to 20% of the transactions, even in rural areas, is happening through UPI. So you are suddenly able to spot the opportunity in where you earlier couldn't spot at all.
Yes.
So earlier, if you see the history of banking in India, first they lent against only assets because they could not, and there was no cash flows to trust. The second challenge is that these businesses have a P&L, but they don't have balance sheets. And banks struggle to lend to businesses that don't have balance sheets, because banks look at debt, equity, etc. And these businesses have no equity. I mean, they have money in the business, but there is no balance sheet that they have, so formalized equity is not present. And the third is that now we are able to finance even transactions. So if you may not want to finance the customer, but checkout financing is available, when a particular transaction is happening, to finance that transaction at the point of sale, rather than trying to finance the full firm, which makes it a little safer and better for both them and us.
All right. So through experience, you have spotted the areas that you can capitalize on in terms of business proposition. Siddharth, but technology is one thing that is really coming out, and more entrepreneurs have become technologically savvy. But you will agree that the VC world has really funded the small and medium enterprises when it comes to the new age sectors and the technology and online driven sectors. So that in some way has bridged the gap for the SME lending or capitalizing. What do you have to say about that?
No, that's true, Nisha. While there's been a lot of capital that has gone into software development and SaaS businesses, for example, the older economy businesses are also benefiting by leveraging this technology.
Yes.
What we're looking at is to fund businesses in old economy sectors like
Yes.
manufacturing,
Yes.
like healthcare, that are leveraging these softwares, these technology
Yes.
to really streamline their operations, to improve efficiencies in their business. And then that leads to obviously a better value proposition to their customers. So technology enablement is happening across sectors.
Right.
And we are identifying companies that are using technology effectively to improve their businesses.
That's right. The entire chain gets the benefit. That's what you're trying to say. And that definitely is one important point. But with that, hold on to your thoughts. We'll discuss much more, and especially the risks, unsecured loan, collaterals. Is this a big worry, especially when you want to capitalize smaller businesses? So we'll slip into a short breather and come back for more discussion on SME funding. Stay tuned. Welcome back. You're watching Big Deal, and we are discussing the whole gamut of SME lending and how it's set to increase. Now, Sumant, we were talking about how banks are looking at this. But in the past 1 decade, banks have toiled with the asset quality concerns, the recovery concerns, and we've beautifully come out of it. In this space, do you think the risks are much higher? How are the collaterals stacking up, and how have the recoveries been?
So see, as we were talking earlier, there has been a structural shift in the way most of the MSMEs have started working and have started banking and have started looking at their future, which is, the whole GST play, the whole movement of money into the bank accounts, the whole push from the government, the whole tax benefits which are coming in. So that has certainly supported us, and we've seen that the quality of credit. And if you really look at, COVID was a year, or those 2 years could have been the worst for them.
Yes.
But most of the MSMEs have really come out pretty well. The ECGLCS as a scheme, as a structure, well thought out, well executed by banks, has really supported them in a big way. That has given a lot of confidence, at least to us, that there is a lot more that can be done. On the collateral, there is a beautiful, again, scheme from the government, which is the credit guarantee scheme, where government is saying we are guaranteeing any MSME who wants to set up shop, does not have the collateral, you go out and, assess the business, we take care of the guarantee, which is, I think is a fantastic thing. Up to earlier, that scheme was up to 2 crores of financing. Now that scheme is available up to 5 crores.
Right.
So these are great benefits which are coming in, great thoughts which are there from the government, and banks are going out and taking the advantage of it for the growth.
So support is coming from the government.
Yes.
But Aseem, what are your thoughts about unsecured lending, and how difficult is it to do only secured lending?
So we began life as a secured lender, but then somewhere we also got into starting unsecured lending, because sometimes we ultimately do the right thing, but after trying all the other options. So we very quickly realized that this is not our cup of tea, and we exited that, and this is now a running down portfolio, just about 100 crores. The rest all is secured lending, and we intend to stay that way. Unsecured lending is a difficult proposition to do, because ultimately you want to judge a customer's ability and willingness to pay.
Yes.
And in case you go wrong in judging the ability or the willingness, your plan B, which is a fallback on assets, is limited.
So what is the solution? What are the solutions required?
So I think I would say a couple of things may really go a long way in helping. One is that the impact cost of doing a transaction is very high. Just the stamp duty on loan agreements, the stamp duty on mortgages. If for MSMEs we could have a look at it, that could really help. And second is that the playing field needs to be leveled, for NBFCs. Surface is available for HFCs and for banks beyond 1 lakh. I think it's time that it extends to NBFCs as well.
So very valuable suggestions come in. Final word and quick answer, Siddharth. How has the experience been on return and exit parameters? Do you think more private equity will be motivated?
Oh, absolutely. From an exit standpoint, as I mentioned, it's obviously a core part of our diligence process. There are multiple options. Now you also have the BSE and NSE merge platforms that list SME companies.
Yes.
From my last count, there were about 900 companies on those platforms and about 150 IPOs last year itself. But in addition to that, when you look at the main exchanges, we have companies in our portfolio that have gone public.
Successfully listed.
Very successfully.
On that. Yeah.
Our first investment, for example, went public and had a very successful IPO. So
Right.
that was the way we exited that. And then we've also looked at strategic exits for a couple of our businesses. We're
Right.
completing one next month.
Consolidation. Right.
So in terms of options, you have a variety of options such as IPOs,
Sure.
strategic exits, as well as secondary exits. And we're almost 4 exits. We've done almost 4 exits from our first fund, and they've been strong returns in line with expectations of around 30% IRR.
So upbeat about this area, and more private equity could line up. Thank you so much, Siddharth,
Thank you.
Sumant, as well as Aseem,
Thank
for
you.
this riveting conversation on an area which is probably looking more attractive for lending as well as equity funding. So with that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in, but stay tuned to CNBC TV 18.